as a prospective estate surveyor and valuer. Maybe you are called upon to come and value a property, and the property is actually a duplex building, and you are finding it difficult to get a similar duplex building within that location. Probably you've walked around, you couldn't get a similar duplex building that you can use the evidence. Even if you now even eventually find one or two, there is no recent transaction on it. So all those conditions are not actually met. So you cannot adopt comparison method of valuation at that point in time. So the best method you can go for next is what? Cost method of valuation. As you can see on the slide, question 5 of 2018-2019, value for sale gross floor area. It is advisable for you to bring out your data. You can actually analyze your data at first. What? 2,400,000, which is also known as the what? Depreciated replacement cost. Depreciated replacement cost of this. And this is your what? Roman figure 3. Like I explained here, saying, okay, your brother gave you 200,000 and you decide to take it to, say, GT Bank. GT Bank gave you what? 5% interest. And you want to save the money for 5 years. Now you want to know what this 200,000 naira will accumulate to at the end of 5 years. So this question now is telling us that what calculate the amount that will be accumulated at the end of 15 years if 20,000 naira is invested at the rate of 22%. Anytime you hear the word year purchase, they can even ask in your exam, like it is common in ESM department, probably the question number 6 or question number 5, you see write short note on the following. You can actually see something like YP, year purchase. It is the present value of 1 naira per annum. Before you now add other things you need to add to it, because we actually have variant of YP. I want you to understand something. When it comes to investment method of valuation, we have like 3 parties involved. The freeholder, you value for the freeholder, you value for the leaseholder, and at times you have your sub-leaseholder. Most of the questions they ask you in exam hall, like when it comes to exam question, they comprise the valuation of the freeholder, the leaseholder, and the sub-leaseholder, all encompassed in one question. Then note, once I take care on how to value for the freeholder, the leaseholder, and the sub-leaseholder, in your question, in your exam question, they will not actually, they may not give you a question that will just be that you should value for the freeholder alone. The question will encompass the whole party. That is, the question will tell you to value for the freeholder, value for the leaseholder, value for the sub-leaseholder. But once you know how to go with your freeholder question, then you know how to go with your leaseholder and your sub-leaseholder, you won't have any problem on how to solve question like this. Take yourself as an example. You are the leaseholder in a property, and maybe you take a lease in the property for like say 10 years. Out of the 10 years that you were given, probably the rent you are paying is 100,000, and you are given a lease of 10 years in a property, and you are paying annual rent of 100,000. Probably you want to travel out, or you want to leave the country, or probably you want to change location, and you don't want to leave the property vacant because you've paid for the lease of 10 years. So you may decide to sublet the property to another party, which was sub-leaseholder. The property was let to Mr. Jao for a term of 18 years 2 years ago for a rent reserved at 100,000 naira per annum. Then Mr. Jao sublet the premises to Mr. Wright, who is now having unexpired sublease of 12 years. It was agreed that Mr. Wright will pay 120,000 naira per annum for the next 6 years and 140,000 naira per annum thereafter for the remaining sublease term. So let's go on to our calculation. And this will give you what? 2,067,780, and that is the capital value of Mr. Richard. So that's the interest of Mr. Richard in the property.